So, as I said earlier, today we'll be looking at something very, very important, and it's something that we need to know we need to know very, very, very well. Even if you're not a professional accountant, but you need to know about it, and that's financial reporting. So, welcome to Business Intelligence Masterclass with Learn to Live Business School, and I know you're gonna gain a lot today and subsequent. And I want to say we may not finish this. Yeah, we may not finish this within the time we have. So it's likely going to break it this section today and then next week, Friday. So let's see how far we can go. We're looking at profit and loss statement, balance sheet, cash flow statement, environmental accounting, then depreciation. And then this is going to be very, 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 very useful to us as a person and as a people. 1 minute. Okay. So profit and loss and all that. However, I want us to understand this. Profit and loss, a loss statement is the name have been moved, to change to statement of profit and the loss. That's income statement. So understand those changes. Balance sheets is currently called statement of financial position. So just know that. Let it be in your mind. So I'll still be using profit and loss, but know that this is a name, that is being called as we speak. So please let it be very, very, there in our mind. Especially for the professionals among us, because they will read it and they will tell you you're using the old name and all that. Yes, we're switching, but remember our focus is the street. We are switching. Our focus is the street. So know the old one, know the new one, then we flow with it. So having established that, let's take it up. Say a company's financial accounts classify, quantify, and record its transactions. Yes, when you hear the word accounting, actually, what is accounting and what is bookkeeping? There are two different things. I think we touched that last week. Yeah, bookkeeping, detailed recording of transaction, day-to-day transaction, while accounting is where you now look at the classification and all that. So there are two different things. So in the financial accounts, the account is classified, the account is quantified, recorded, transactions. Then they are extremely useful for people outside the business. So not just for the business, for people outside the business is a need, is a need for people outside the business. Just think of it. Now, it said such as uh, creditors and their potential investors. Yes, very, very important, very, very useful, very, very needful. And move it up to as well as those currently involved with making investment decisions. Now, for this reason, the accountant should be concise and clearly present the timing and the certainty of future cash flows. What does this mean to us? What does this mean to us? When you hear the word accounts or financial reporting, we're not just looking at one history somewhere. You're discussing the life of the business. You're discussing what makes the business the business. You're discussing why people come to you as a business. You're discussing why people will also run away from you as a business. Sincerely, when it comes to financial reporting, when it comes to accounts, you're talking about everything put together. let's look at it from this angle. You have a wonderful sales team. They are busy making sales. Everything, I mean, they are turning in the numbers. But someone somewhere wasn't keeping the records. Someone somewhere wasn't, I mean, money was just flowing into the account in millions and in billions and in trillions. And there's no record somewhere. How will you know whether you're making profits, whether you're making loss? How will you know, how can people, how will somebody assess what you're doing? That is very, very critical. You must understand what your cash flow, how it's coming in, how it's going out. You must understand all the areas of accounts. Yes, you don't need to be a chartered accountant to do that. Yes, so that people looking at the company can decide whether or not to invest in, lend money to, or do business with it. This is extremely priority. Yes, as low as your cash flow. Key elements: the profit and loss account, which you already know, the union balance sheet and the cash flow statements are the most important financial statements in an annual review. Yes. So supplemented by the report notes. Now, to understand these statements, a knowledge of accounting principles, depreciation, amortization, and depletion is vital. I'll say it again. To understand how these things work, you must have an understanding of accounting principles. So we're going to talk about a number of accounting principles. Depreciation. Most of us have never, ever, 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 ever done depreciation. We need to know how it's done. Very, very important. Amortization, depletion. Now, these things are not to slow you down. These are vital accounting principles, vital accounting standards, vital accounting, acceptable accounting structures that you need to get your work done. Yes. Accountants also need to understand the legal requirement that the statement must satisfy. Yes. And how environmental laws can affect a business and its accounts. All these things are very, very necessary and needed. It's a must for you. It's a must for everyone. If your account must speak, all these things must be there. Yes. The account is not for you. You know that. Those reports are not for you. They are for outsiders, others. In as much as you're using it for business decisions and every other thing you're doing, but it's not just for you alone. Very, very key. Very, very key. To have this at the back of your mind. No, people wake up tomorrow say, I need investors, I need people to invest in my business. They will need your account statements, not just the one you print from the bank. No, annual reports, year in, year out. Have you prepared your annual reports for the year? The year that just ended, 2025. Have you prepared your annual reports? That's very, very vital. I cannot prepare an annual report without having the necessary information. How are your books kept? How are your books kept? Number one, let's look at accounting standard. Yeah. General accepted principles, standardized practice worldwide to ensure accuracy and prevent fraud. That's accounting standard. The international community called them GAAP and yeah, GAAP. The other ones also I remember. They came together international accounting standard, and all of them, and bit of standards that we use, so that globally, all the people that have signed up in that international accounting standard, they will do the same accounting process. So when you're reading accounting statement or annual report in Nigeria, and the same thing with US, the same thing with UK, the same thing with Canada, the same thing with Iran, think about it. That's the standardization we're talking of. Not that Russia will be doing a different thing, Canada will be doing a different thing, uh, Egypt will do a different thing. No, no. So someone from any part of the world can actually come, look at these things, and take it off from there. So if you're studying account in Nigeria as a businessman, you understand how the figures are done, and you can also interpret that of the US. So when you're called for management meeting or decision-making meeting, or when it comes to want to buy a business or invest in a business, it will not be difficult for you. International standards simplifies the account words reporting. Yes, companies must meet environmental accounting rules and regulations. Profit and loss statement. What does it do? It shows how much money a company is making, and especially useful for potential investors and their stakeholders. Outlines revenues and gains minus expenses and losses or operating costs. Informs a company whether a profit warning is what's needed. Balance sheet. Gives a snapshot of how much a business is worth at a certain time, and is a good indicator of its long-term health. Balance sheet balances companies assets against its equity and liability. List different types of assets, including tangible fixed assets and current assets. They are all there. They are all there. Just giving you introduction of it, just for you to understand, have a basic understanding. Now, reviews, that's cash flow, reviews a company's liquidity by tracking the flow of cash. Yes, yes, yes. In fact, for me, yes, other ones are very, very important. But cash flow is, for me, is the most important. Yes. Money or short-term investment in and out of the company. I don't know if you've come across this. A company, I mean, a very, 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 very big company where they don't have liquid. They're not liquid enough. They can't pay salary. They can't meet their day-to-day obligation. But the company is running millions, running billions. That is where cash flow comes in. So if you're not careful enough with your cash flow, you may have so much as in your book, but you cannot pay salary. Yes, it may be out of credit, your credit cycle adjustment, can be anything. Contracts done, payment still coming, and all that. Debt being owed. So your ability to manage your cash flow is very, very, very important. As you're looking at your system, as you're looking at your books, your company is doing well. Do you have enough cash to meet your daily obligations? Do you have enough cash to meet your monthly obligations? Do you have enough cash to meet your weekly obligations, quarterly obligations? Or you tell them story, please hold on, give me additional 6 months. Just think of it. Just think of it. Just think of it. Cash flow shows whether a company can sustain itself, grow, and pay debts. Detailed cash flow from operating, from detailed cash flow from operating, investing, and the financing activities. You need to understand your cash flow. Please. Yes, we know that that's big, those big businesses are coming that, they will run in billions and all that. But those small, small, small obligations are very, very important as well. But they are the day-to-day activities that also run the system. Very, very important. Auditing. The accounts of public companies are given unbiased scrutiny by external accountants to verify that they are accurate and clear. Yes, this is a legal requirement in most countries designed to ensure market confidence in the business world and transparency in corporate finance. A company may also have an internal audit process, which means that its accounts are checked before being submitted to an external auditor. Yes, yes. In fact, when you look at big companies, organizations, they have both internal auditing and external auditors. Internal auditors, we call them control, sometimes depend on nomenclature, control units, and the rest of it. Now, the internal auditors are the mechanisms put by the organization internally, while external auditors are statutory. And when they are done, they will sign off 74 billion US dollars. Yeah, the total value lost by shareholders in 2021 Enron accounting scandal. Yes. For those of us that follows the business world, in 2021, Enron messed up the system, and Enron was audited by Arthur Anderson. So both Enron and Arthur Anderson, they had it. I mean, they were messed up. Enron is an American energy company. In fact, I think during my one of my program, I used Enron when I was writing fraud detection and control. Enron was a major case study for me. Enron messed up big time. They were, doing so well. People were buying shares. Students, everybody was buying shares, not knowing that the top management of the company were busy. Their books were not good, and they were not using the money the way they should do, mismanaging everything. They were busy withdrawing their own shares. They hyped the share. People were buying and they were withdrawing their own. By the time when the books were open, nothing. I don't know. After Anderson, that was one of the top consulting firm as at that time. I don't know what happened, why they didn't disclose. Likely they were also settled in Nigerian terms. And that's just it. 74 billion USD of people's money gone. It's one of the biggest scandal. It's one of the biggest scandal when it came to auditing. When it comes to when we were discussing auditing. Please don't be the next Aaron. Please. Let your company don't allow your company to be the next Enron. I know you're going to grow big. I know you're going to grow very, 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 very big. I know. But please, as you're growing, make sure that your books are intact, are in order. I'm not talking of now you're just making few millions, 10 million, 100 million. No, I'm not. No. But this is the best time to start. And don't just say, I'm just a one-man business, I'm just starting. Please know these things and start putting those structures into place. A structure that runs the business, not you. When people come to your business, it's those structures they are looking for. They are not looking for your faces. Yes, the place of human being is very, very important. But what sustain business, what keep business running is structures and systems you've put in place. If Enron, the US energy company, with all the expertise, can decide to cheat, can decide to do people of their hard-earned money, students, think about it. Anybody can do it. Anybody can do it. So it's not about the books. It's about keeping the structure the way it should be done. Because for them to manipulate and, for this money to go down, a number of processes were, dismantled, procedures, policies, system and structures were not followed. Please audit yourself. Don't wait for external auditors. Audit yourself. In that your one-man business, audit yourself. Are my structures okay? Audit yourself. Are my records in good shape? Number 5, environmental accounting. Yes. There are so many environmental rules and regulations that companies need to keep. So environmental accounting is like trying to know whether you're keeping those environmental rules in line with your financial statement. Remember I said there are statutory accounting reporting or financial reporting. That one is when they will not be checking your environmental accounting. Is it properly kept? Is it properly kept? Is it properly kept? Is it properly kept? Very, very important. Reviews compliance with the environmental, social, and government governance criteria. Key, very, very key. Very, very key. Depreciation. Yeah. Yes. How many of us have ever done depreciation in our business? Your assets. In this part of the world, I don't think people even do depreciation. Apart from the big, big businesses. Please, you will learn how to do depreciation. You will learn it very, very well. You learn how to do depreciation. It's important. It's important. It's very, very key. Depreciation is very, very essential in business. What is depreciation? Accounts for the decrease in value over time of tangible fixed assets. Yes, in order to spread the cost of assets over their economic life. Let me break it down because grammar don't dey plenty. You bought generator, let's say 1 million, and that generator is meant to serve you for 4 years. That's its recommended lifetime. I know we use more than 4 years, I know. Then you share the 1 million. Ask yourself, how many months are in that 4 years? 12 plus 12 is what? 24. So another 12. How many? 48 months. Hope I'm correct. Now, 1 million divided by 48. However, there's what we call the straight line method, where we'll say the cost of the product minus scrap value all over lifetime. So 1 million minus scrap. What is scrap value? Scrap value is what you will sell that generator by the time you're done using it for 4 years. Then you now divide it by number of months. So that each month, whatever you have, you remove that and keep as what? Depreciation. So that by the end of 4 years, and you now sell that as scrap value, you add the entire money to buy another generator. I hope that is clear. It can be calculated with a number of different methods, yes. Tangible fixed assets include building, plants, and machinery. Number 7, amortization and depletion. We'll look into this. Account for the decrease in value over time of a range of intangible assets. The other difference now, loans and natural resources. Intangible assets include patents, trademark logos, and copyrights. Natural resources include minerals and forests. So I'll be stopping here. So from next week, we'll go into P&L very, very well. Yes. I'll stop here for today, and let me hear your questions, contributions, areas of concern. Please, let's go ahead, please. What are the questions? What are the areas of concern? Let's take it from here. Remember, the new name for profit and loss is what? Statement of profits and loss, or income statements. So this is where we'll start, continue from next week. Okay, can I get your feedbacks? Your feedback, your questions, your feedback. Go ahead. The floor is yours. The floor is yours, please. Your contribution, your takeaway. We've been talking for the past 40 minutes. Yeah, what are your takeaways? What are your contribution? What can you implement? This is Friday. So use Saturday, Sunday to brood over it. What can you implement in your system coming next week, Monday?
Yeah. Good morning, sir.
Good morning, Bright. You're welcome.
Thank you so much for the section, sir. I've come to realize this, the accounting, financial accounting a company wouldn't really run without this, you know, is a vital part of every organization that will grow.
Yeah.
And even as a consultant, you must be careful to be sure that any firm you are consulting for, that their documents are clean.
Yeah.
Because if it is not done properly, there's every possibility of even indicting someone, even when your hands are clean.
Yeah.
Even when your hands are clean, if your documents are not saying you are clean, you can be indicted in the process. So it becomes something that must that it becomes a must in our operational system, to make sure that the financial accounting, the documentation, everything is okay. And I feel from now on, it should be our everyday lifestyle. Beyond the company lifestyle, even a personal life should be able to keep track of your finances, so you know where is leaking and where needs attention and all of that. So beyond even the company section, even as an individual, you should be able to track your finances. Thank you, sir.
Thank you. Thank you so much. In fact, that takes me back to Arthur Anderson again. After the Enron challenge, after the Enron saga, Arthur Anderson never recovered again. In fact, most of the top executive of Enron died and all that, all that. A whole lot. It was a messy situation, but it has happened, it has happened, and we're meant to learn. Thank you so, so much for that contribution. That's a very beautiful one. Thank you so much. Thank you so much. Thank you for that take home. Right, one more time. Any other person, please, your take home, take home, take home, take home. What are your take homes? You're welcome, sir.
Morning,
Morning, sir.
morning everyone. My take home, I've come to realized that without proper and correct financial accounting or proper balance sheets of a company, the company won't know when they fail or when
Mm,
they start working. Yeah, they
mm.
won't know when they start winding because as the cash is coming, like as I run a company and as a real estate company, start cash money flows. We discover that without the proper sheet, proper accounting, that you won't even know when you have money to pay your salaries to meet up with the day-to-day runnings.
Mm,
Somebody may be keeping just giving people receipts, but you don't just give receipt, keep receipting the cash flow, the inflow. But also put a proper accounting records of outflow because that's the main aspect. You
mm.
don't want and not just writing it, but it has to be a daily thing
Yeah,
and a constant something that every day you go through your balance sheet. And one of the things I also learned is investors are interested in your balance sheet. But
yeah.
no matter how big you try to present your proposal
Mm,
and how skillful you present your marketing abilities and what you can achieve, when they check for your accounting records as not there, you already start shooting yourself on the neck.
very simple.
The business will they won't have that confidence to invest that money
Mm,
because you have a proper record of the ones you have already. So how will you guarantee the one they are bringing in? Even with your wonderful proposal, your wonderful business plan, and there's no business plan that does not have accounting records.
mm,
So have that accounting record. So outsiders, you are telling them that you're not capable of managing their funds.
mm.
And take home that.
Thank you so much. Thank you so much. In fact, like you said, don't start without understanding your records. At least the basic ones. We call it the fundamentals, the books of original entries. Learn them, use them. Let the accountant do the other one, but have your basic records. Please, 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 please. Very, very key. Ah, please. Don't start anyhow. Don't start anyhow. Don't start anyhow. No. It's like you want to build let's say you want to build 10-story building. You now start with a foundation of a one story. Yes. You know, okay, or normal bungalow. I said, okay, when you now get money, you will now extend to 10-story building. When you now get money to extend it, you will start all over again. But if you make foundation for 10-story building and just have your first and live inside it, no problem. When the money now come, you can now be adding and adding and adding and adding and adding and adding. That's the way it is. Please don't start anyhow. Start with guidance. Start with guidance. I want to say thank you to everyone. I will meet again next week and we'll continue from where we stopped. I know we've gotten value for today. Please, next week we'll get more values. From those in our platform, share this link so others can also join the platform and benefit. We're just starting. There's a whole lot to share. There's a whole lot to learn. I want to say thank you to everyone. Let's meet again Friday, 5 a.m. next week, West African time. Thank you. Do have a productive week ahead.
Thank you, Doctor.
Thank you, sir.
Thank you, sir.
Thank you. Thank you.